the midst of all this volatility, many investors are wondering what to buy, what to sell, and what to hold on to. Well, our market beat analysts, Chris Markoch and Thomas Hughes, are here to break it all down for us. Guys, I'm excited to hear what your top picks are for stocks that you're looking to buy, sell, and hold right now. We're going to get to your picks in just a minute. But first, I want to go over a little bit of kind of what you guys look at as analysts for how you decide what to rate a stock, whether it's a buy, sell, or hold.
Well, I look at a combination of factors. I want to see the company growing. I like to see it outperforming expectations. I like to find some value in there somewhere, whether it be versus other companies or versus its own history, versus the analyst expectations. I want to see firm analyst support, really with uptrending sentiment and uptrending price targets. And then if there's good free cash flow and capital returns, that's just icing on the cake.
So, Chris, what kind of research are you doing before you make your decision on whether a stock is a buy, sell, or hold? Are you looking at other analysts' opinions? Are you looking into the company? What does that process look like for you?
Yeah, I do tend to look at some analysts' opinions, but generally I try to do my own research and my own thinking about the company. I try to look at where their earnings have been in the past, where their earnings are likely to go in the future. I tend to be more of a long-term investor in my own personal portfolio, so I'm not as concerned about what the stock might be doing in terms of technical movements at any one given moment in time, but I'm looking at fundamental drivers for the business. Like Thomas said, I'm looking for where's the growth going to come from, how soon is it going to get here, and is it growth that's going to be sustainable over the long term?
Both of you have done a lot of that research right now and have picked out your top buy, sell, and hold stocks in the market right now. We're going to get to those picks in just one moment. But first, here's a look at a tool you can use to see what analysts are saying about any stock.
Want to keep your finger on the pulse of the market? Text the word YouTube to 68285. That's 68285 and get free breaking news alerts from MarketBeat for the stocks that matter most to you. Don't miss out on crucial updates. Stay informed and stay ahead.
Well, like most people, I am most interested in hearing what your buy pick is right now, but let's save the best for last. I think let's start with which company you are looking to hold right now and why. Chris, let's start with you.
Sure. For my pick on stocks to hold, I'm choosing McDonald's. Stock's up about 9% since it reported earnings in July, and the report wasn't that good. Same store sales were down for the first time since 2020, and you'd have to go back a lot further than 2020 to find the last time it did it before then. So this wasn't a great report, and the stock's up 9%. Kind of feels to me like most of the growth has been priced in. I like McDonald's. I like the company. It pays an attractive and a growing dividend that I don't see being in any danger. There's been a lot of talk about issues about demand and pricing, and I don't think any of those issues are issues that a healthier economy and a healthier consumer won't fix. It was investing in digital well before 2020, and that's paying off today. All of that being said, and going back to the rubric that you asked us to talk about at the beginning of how do we determine whether a stock's a buy, sell, and a hold, I think the next few quarters are going to be challenging for the company in terms of stock price growth. It's trading at about 23 times forward earnings. It was around 21 times forward earnings before the run up. The analyst forecasts on MarketBeat are a little bit more bullish about McDonald's than I am. They have it as a moderate buy, but the 9% run up on a challenging earnings report lends me to think that most of the growth, at least in the short term, is already priced into the stock.
Thomas, where do you sit on McDonald's? Are you a McDonald's fan and especially a fan of what the company is doing right now?
Oh, well, according to McDonald's internal data, I'm a super heavy user. I do like McDonald's. I'm probably part of why the stock price keeps going up. But right now, the earnings report was a bit of a concern. We don't want to see this company contracting. We certainly don't want to see a negative comp. But what I think the results really show is the diversified nature of the business because US was weak, Latin America was banging. Latin America is crushing it for a lot of different companies. So I would definitely look in that direction for some investments. But as far as McDonald's goes, it's on the cusp of pivoting back to growth very soon. The forecasts for next year are very bullish. The analysts have trimmed their targets since the last report, but they're still looking at about 10 to 15% upside, which puts the market back at the all-time high. Any kind of good news will push it to a new all-time high, and I think that could come with the FOMC.
Thomas, let's move on to your hold pick. Which stock are you looking to hold?
Well, I'm going to be holding Disney. I'm holding Disney. The stock price is down. Obviously, it's been struggling for the last couple of years, but we're looking at a CEO-led turnaround. The return of Iger is huge news for this business. That's been gaining traction ever since he got back on board. They brought back the capital returns. That was a huge move. Right now, the parks are struggling, but they're still growing. Entertainment is growing, and streaming is turning profitable, which is really the big story this year. We're kind of in wait and see mode to see how the next couple of quarters unfold because consumers are under pressure and there's certainly some pressure on the company's ability to grow and to profit. But they've got some big catalysts, I think, in the works that are going to help with results in the near term and set it up for some big leverage gains in the long term. Now, among those, the Wolverine and Deadpool movie did very, very well. So that's certainly going to show up in the next quarter's results. They've been opening a lot of new attractions and parks centered around Avatar and Indiana Jones, and some of the other hotter franchises. That should help sustain activity, if not growth, in the parks until the consumer rebound takes traction again. And then there are also some new films in the work. They've got Avatar and The Incredibles and Moana, which are all going to be driving results for this company later on in the year. Now, interest rates are supposed to fall soon, and that will be a tailwind, I think, for the business. It may be a year or more before that impact starts to show up in Disney's results. But again, with prices where they are right now, they're kind of at rock bottom. We have capital returns back in play. I think it's a good stock to hold.
If you've been to Disney recently, especially one of the theme parks, it looks like they're doing quite well. Those lines are never short. I do want to hear your opinion on that, Chris. Do you have a different take on Disney?
Well, I'm going to probably steal your thunder a little bit, Bridget, because Disney was the stock that I put as my sell, and I think that's where you're going next. But I'll just say I'm a little bit more bearish than Thomas is. I was excited, or I should say, I was optimistic about the return of Bob Iger as the CEO. I even thought that maybe the earnings report we saw a couple of quarters ago was a sign that the company was turning the corner. They may still be, but right now I'm struggling to figure out what the company's long-term strategy really seems to be. Right now, it just feels like a lot of it is they're relying on Iger and the idea of we're Disney and we've done it before and we'll do it again. And I'm hearing a lot of things like, well, we think this is going to happen. We hope this is going to happen. The company's struggling to get all the parts of the business firing on all cylinders. And I think the theme park is a really good place to start. Profits right now are being used to help get that streaming business up to a level of profitability. But there is concern, and the company stated it in their last earnings report, that demand for the theme parks is starting to show some cracks. Revenue from the division was only up about 2%, and that was at about 8.3 billion. And the operating income fell to about 2.2 billion. This income that they drive from the park is about 53% of Disney's total revenue, and Disney management reported that the next few quarters would be challenging for that division. So I don't know. The stock's down slightly for the year. It's trading down near 5-year lows. I understand that generally speaking, that means that the stock doesn't have anywhere to go but up, but it's more than likely that the company's going to figure it out. But right now it looks like there's just a lot of faith, trust, and pixie dust going on, and it's just a pass for me.
So, Thomas, why do you think Disney has a chance to come back?
This is the house of mouse. I mean, they're struggling right now because there are some consumer pressures. Even with that warning, they still reiterated their guidance. They're still looking for growth. It's going to be tepid, you know. So I think in a couple of quarters, we'll start to see the company begin gaining traction in all of its segments at once, which will really help leverage its growth and its earnings.
We'll see if they can bring back that Disney magic. All right. Well, Thomas, let's get to your sell pick now. Which stock are you looking at selling right now?
Well, this might be one that Chris won't agree with, but I'm looking to sell Tesla. All right. It's still the leading EV OEM. It makes profits. The balance sheet is healthy, but the core business is contracting. They're still deep in the price wars. Margins are contracting. Earnings are suffering. The valuation is still very high. I personally am a fan of Elon Musk, but the Elon Musk factor is pricey. It's expensive to buy the stock. And right now, the market is waiting and hoping for the next phase of growth. That may come soon, but I don't really expect to see any good news out of the EV segment without a groundbreaking development anytime soon because demand is just so poor and the price wars are having a big impact on the revenue. Also, they're spending more, trying to invest in that next phase of growth. It will likely pay off. But again, we're looking at 2 or 3 quarters probably before we start seeing it able to generate money from those advances, if even then. There's still no consensus among the analysts. The analyst sentiment is very mixed. There's a very wide range of sentiment targets from sell to buy, and the price targets are equally wide. So even if the stock doesn't move lower from here and stay lower, I expect to see significant volatility and not much upward trend in the action.
Chris, do you think Tesla's a sell right now too?
You know, I find it hard to say it's a sell, and I think I'll admit there's the Elon Musk factor there for me. He's been counted out so many times, and he tends to come back from the dead all these times. I think in the short term, it's hard for me to get behind Tesla stock. In the long term, I think a lot of the growth that investors are counting on is going to come from autonomous driving, and Tesla is leaps and bounds ahead of other companies in terms of getting that to market. But there's still a big if attached to that. Can they get that done? It's a stock it's always going to be very noisy. It's always going to be very polarizing. Um, I I can't say I disagree with Thomas's sell, but I would say to me it's probably one that you want to hold on to.
Just in case, right? Fear of
Just in case,
missing
right?
out. You never
All
know.
right.
All right. Well, let's move on to the moment we've all been waiting for. We
Sure.
want to hear your buy picks, and I really
Yeah.
want to know the why too.
Sure.
Thomas, let's get to your first buy pick.
All right. My buy pick is Monday.com. Monday.com is a workflow automation platform. It's resonating with clients because it's easy to use and it scales well. It's got this plug and play quality where you can just kind of pick which segments of it you want to use. You build them together to create your own workflow. So this past quarter was a beat and raise quarter. Revenue was up 35%, 300 basis points better than expected. That revenue strength was driven on new clients and penetration. Their net retention rate is 110%, which means that existing clients are spending 10% more this year than last year, with the addition of new clients, which will also increase their spending over the next year, provide some leverage for growth. Margins are widening with that leverage and the efficiency that the company is working towards. Adjusted operating income was up 130%. That's a real good example of how that leverage can affect your investment quality. Adjusted earnings at 94 cents were 6,700 basis points better than expected, 67%. That's huge. That's a huge outperformance. The company also raised guidance. This has raised guidance again. This is like the third time this year. Momentum is clearly building. Also, the balance sheet is a super fortress. It's net cash. Total liability is less than 0.5 the cash position, less compared to assets. Shareholder equity is rising. I think it's only a matter of time before capital returns come into play. And then there's the analyst response. All those things are great, but without the analysts, the upside potential is really limited. The analyst response is overwhelmingly bullish. They're leading the stock higher. It's got about 20% upside at consensus. We're going to expect it to go above consensus because of the revision trends. And what I see in the stock price right now is a retest of the all-time highs that may come as soon as this year, and that's a 35% upside at least.
Now, where is the entry point right now if you were just looking at getting into Monday.com?
So right now, Monday.com stock is trending higher, and it moved up to set a new multi-year high on this past report. So not to chase the price higher, but you're going to want to get in probably pretty soon. Wait for any kind of pullback in the action as your entry point, and then just start to slowly build a position with time. I would certainly expect to see this stock retest the all-time highs, and within the next year or two, you set a new all-time high and then continue this trend upward.
Chris, have you followed Monday.com? What do you think of that pick?
I haven't followed it quite as closely as Thomas has, but it's a stock that's very intriguing to me. And I think one of the reasons why, and I'll just keep my answer a little bit shorter, Bridget, is just, when you talk about looking for buy stocks, you're talking about, as the saying goes, you try to skate where the puck is moving. And Monday is certainly right in that sweet spot. Remote work is not something that's going away. It may not exist in the same form and fashion that it exists today over the next 10 years, but it's not going away. And that's exactly the type of business that Monday.com is going to work for very well in terms of you need the tools to make it easy for teams to collaborate with each other no matter where they are.
Yeah. One of the points that I forgot to hit on is that Monday.com is monetizing AI today. All right.
Uh,
It is a good example of what we've been expecting for the second wave of AI, where NVIDIA and the chip makers are the leading edge, the first wave with infrastructure. Monday is actually using AI and they're monetizing it for themselves and for their clients, which is huge because the monetization of services is going to be the largest, fastest growing segment of AI, which is saying something considering NVIDIA's rapid rise over the last 2 years.
Well, thanks for your pick, Thomas. Now, Chris, I'm excited to hear which stock you have for us as your top buy pick right now.
Well, I'm going to stay consistent with what I've been saying for the last several weeks, Bridget. My pick is Palantir. Thomas actually gave me a nice place to jump off in terms of the monetization of AI, because one of the things that Palantir really does well is it's helping other companies monetize AI. And in the process, they're becoming the go-to provider for not just the company's own proprietary LLM, but there are other platforms such as Foundry and Gotham that are allowing companies to actually make AI give them useful insights. And that's, you'll hear that from the CEO, Alex Karp, a lot, is the fact that Palantir is about making AI useful for other companies. Stock cracked the $30 mark after it reported earnings in early August. It's up about 81% year to date. It's got a high price to earnings ratio. There are all kinds of reasons to believe the stock is overvalued. It seems like every week the company just keeps announcing new partnerships, new deals. It just suggests that there's a lot more growth coming for this company. And not only are other companies starting to get wind of this, but it seems like the analyst community is starting to align as well. On MarketBeat, the consensus is still reduce for Palantir, but the price targets have gone up. So, a year ago, the price targets were still around $10. Then they went up to around $15, $16. Now they're up around $21, $23. So analysts are grudgingly coming along with the stock. We talked about this a couple of weeks ago on the channel. There is the possibility that Palantir is going to get included into the S&P 500 this time around. If so, we'll find out about that in early September. That would be another catalyst for the stock because, as we said, at that point, many institutions would have no choice but to include Palantir as part of their ETF, and that's just going to drive the stock price higher.
And Thomas, what do you think about trying to get into Palantir right now?
Yeah, I'm on board with Palantir. I think they've got a great growth trajectory. I think they're doing a great job implementing their services and growing their business. They certainly make money. I do have some concerns with the valuation. I think right now, with the current outlook, the valuation has pretty much priced in the next few years of growth. So I'm really going to want to see some strong outperformance and some accelerated momentum with new deals and with new clients.
As these new clients come on, Chris, how high do you think Palantir can go in its stock price, especially?
Well, if we're talking about in the next 12 months, we were talking about this a little while ago. The most bullish estimate, I think, is for the stock to get up somewhere around 38 in the next 12 months. I'm not quite that bullish on it. I think 33, 34 is a really good price target in that time frame. For some investors, if they're not in Palantir right now, that may not excite them too much. We're talking about 10% gain. They can probably find that in other stocks. But again, I'm looking at this and saying, if I'm looking at Palantir as a long-term hold, where might the stock be in 5 years, in 10 years? And I just think that right now it's okay to go ahead and buy at $30 if you believe that in 5 or 10 years it might be at $45, $50 or even higher.
Well, thank you both for the good discussion on what to sell, what to buy, and what to hold right now. You can find even more information on all of these stocks right on marketbeat.com. And of course, subscribe to our channel for more market news. Happy investing, everyone.